So this is BYBIT homepage. First, you will go to derivative. Click on derivative. And then it brings you to this page. If you look at the top, you're going to see perpetual features and options. So now, this is perpetual trade. I know we call it futures trade sometimes, but it is not futures. It is a perpetual contract. You ask yourself, which pair do I want to take on this trade? So if you determine a pair, let's say now I want to take atom trade. So I click on this near this that's where my pair is. Click on the search button and search for atom USDT. It will be two. It will show you atom USDT spot and atom USDT perpetual. So you have to select USDT perpetual. Now when you are done, so now look at available. My available is showing $46. So you want to make sure that you have money there. If you don't have money there, click on your plus sign and then you can transfer money from any account. If you click on this transfer, it's going to bring you transfer from funding to unified trading account. Your BYBIT Perpetual uses the money in your unified trading account. So you have to deposit money here. If it's already in your funding, you transfer it. After that, you confirm it. So now let's continue. So I've selected the pair I want to trade now. I want to trade Atom USDT on perpetual contract. You can choose to remove these charts by clicking on this candle here. It will go off. But if you want to see it, you can bring it down. But let me just leave it like that. Also, in that switch, if you want to see the chart alone, you can. This is already on trade. If you want to see only the charts, you can click on charts here. And then brings you to only the charts. Then you can go back to trade. So here we are now. First thing is the mode of trading. This is isolated. You can either use our isolated mode or cross mode. I don't use this portfolio mode anything. I basically use this. I like using isolated margin most times. You see regular use. So here is also a regular use, and this is professional derivative trader. So you don't want to come here yet. Yes. So just make use of any of these two. I mostly use isolated margin trade. You may want to know the difference between isolated and cross. In isolated, if I choose to enter a trade with only, let's say I choose to enter a trade with only $20. And I chose only $20 to enter this trade now, for instance. The remaining $26 here is secured. If I get liquidated, because I am in isolated mode, it is only that $20 I used to enter the trade that will get lost entirely. But that's if I don't set my stop loss. But once I set my stop loss, my trade will not go beyond my stop loss, except in rare cases where the market is so volatile that my trade could not peak before it moves away from where I set my stop loss. Hope you get it. So now that's the good thing about isolated. Then if you want to incorporate every money in your account, and let's say you still use $50 to enter this trade, you use cross margin. You confirm cross margin. Then you use cross margin. In cross margin, even if you select only $20 here, and you do not put stop loss, the other balance here is at risk of getting lost if market keeps going against your direction. The only good thing about cross margin is that you can use this to wedge your trade until your market decides to move in your desired direction. You get? So you can avoid stop loss hunts. What stop loss hunt means you can avoid markets hitting your stop loss before going to your direction, because you've already used the one that is remaining in your trading account balance to wedge the trade. Mind you, if market is going against you, this one is reducing, or it is reducing. Yes, you'll be seeing it reduce. It's until you start adding up, it will turn up again and then start adding up. So whatever you are doing on your trade is instantly affecting what is here. So that's cross. So you make up your mind and decide the one you want to use. But personally, I like using isolated because most times I don't trade without stop loss. So there's no need using costs. Let me still close up everything to avoid issues. You get? So that's being said, the next thing you want to do now is what? Select your leverage. You click on this 10x. Select your leverage. You can decide to use 10x, 15x, 20x. You adjust it as much as you can. Let's say in this trade, I want to use 20x for this trade now. And then after that, here that has market. If you choose market, it means that you don't have an entry level. You just want to enter immediately at the current market price. You leave it a market. But most times when I'm taking trades on perpetual contract like this, I like setting my own limits, except when I was not there when market got to my desired entry and started moving. Current market price entry does not go with my psychology when it comes to perpetual contract trading, except on spots where I know I'm just going to buy and hold. So now let me change this to limit order. Now you will decide on the price you want to take enter this trade. This is already choosing limits. So I have a trade setup already I want to use for this trade. So this is this trade setup I want to enter, and I'm going to use this trade setup. So in this setup, my entry is 8.353. So I'll go and impute atom entry 8.353. Then here, let me change it back to order by quantity. Then here you select the quantity you want to use. So here you can use this to scroll. It's already showing you in percent. The 100% here is showing you that you're using all of the money you have here. So you can decide to use 50% of what you have here. Or see, as you are shifting it, you'll be seeing the dollar equivalent here. Look at this place, they wrote value and cost. So look closely, you're going to see the cost, the exact cost. So we'll see the one in red and the one in blue. So now the cost of this trade is $24.74. That's what it's going to cost you to take this long. Then you come here below and see your TP and your stop loss. You click on TP stop loss. Now you ask yourself, do you want to long or do you want to short? So you want in this trade, we are taking a long trade. Long is for buy, while short is for sell. I already explained that in my previous video. So now you put your profits, take profit trigger. Then you put your take profit price. In this setup, our take profit is $9, 9.035. 9.035. This is the expected profit for that trade, and this is the percentage return of that trade. So now you put in your stop loss trigger. For your stop loss, we have 8.299. So 8.299. Let me not be mistaken. 8.299. So the good thing about this thing is that it shows you the exact money you are about to lose. So your expected loss is $3.132. And this is the expected ROI percentage loss for this trade. Then if you are okay with it, you click on confirm. You click on confirm, and then you confirm the trade. But I think I want to increase my this thing, my leverage. Here it is. I'm okay with what I'm seeing. The most important in this thing is not even the profit. The most important is the loss. Can you bear this loss if it goes? That's the most important thing. If you can bear it, then shoot your shots. So here we confirm this trade. So because of the leverage that I increased this to 30x. That was why we got those increase in profits and also increase in loss. Either ways. Last thing you do is to click on buy or /long. Then you click on buy. It brings out these things for you. You confirm your order. I always like confirming my orders. Yes. Order price. This is my entry price, 8.353. These are the things I check. Order cost. What is costing is $24. That's what I use in taking this trade. It's 4.69. Then I have position leverage. I use 30x. I selected the liquidation price. That's inside. That's if I don't use stop loss. But I'm already using stop loss. So I won't get liquidated, except in rare cases where markets move so parabolic that it was not controlled and your order was not picked at stop loss. Mm-hmm. So now your TP and your stop loss is you confirm it, your TP okay. So now we are okay. We are okay. Once you've confirmed these things, these are the things I confirm. And then I'll click on confirm. Now, so now place this order. Here is our order. We have an open order here. Once your trade triggers, you see your positions here. And you can decide to cancel anytime. This is cancel button. Decide to cancel it here. Even when it triggers, you see it in your positions, you can still decide to cancel it anytime. You get? So now is your choice. So in my right hand side, you see these red values and these green values. These are buy orders, and these are sell orders. But in case you don't know how I was able to interpret this trade setup, please check the description. I dropped a video link on how to interpret and read trade signals like a pro. Yeah, you know this thing and know it for life. Thank you for watching to the end. Please remember to like and subscribe our video, because each time we come here, we always bring quality and detailed information of whatever we want to talk about. You have a lovely day.